Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of June. Sterling collapses on a new poll. The British pound came under massive selling interest on Friday after a new opinion poll placed the Leave campaign ahead by 10 percentage points. The survey showed that 55% of respondents favored leaving the EU and 45% were in favor of staying. This was the first time since November that a survey indicated more than 50% support for the Leave vote. Interestingly, the poll attracted enough attention to cause bookmakers such as Betfair to reduce the implicit probability of the UK remaining in the EU to 70% from 78% previously. Moving forward, we expect incoming polls to move the pound more aggressively than before, as they may carry more significance in the eyes of investors with just a few days to go until the referendum. If new polls continue to show a tight race between the two campaigns as we approach the voting day, the outcome is likely to become even more uncertain, and hence volatility in GBP is likely to heighten further. Overall, we maintain the view that the pound's direction heading into the ballots may be driven more by fresh opinion surveys and less by incoming economic data. Even the upcoming Bank of England policy meeting could cause less market reaction than usual. As for today's highlights, during the European day we get Sweden's PES unemployment rate for May, though no forecast is available. We have only one speaker on today's agenda, ECB Governing Council member Jens Weidmann. As for the rest of the week, on Tuesday, US retail sales for May are expected to slow after April's astonishing surge. From the UK, we get CPI data for May. Both the headline and the core rates are expected to have accelerated from previously. On Wednesday, all the lights will fall on the FOMC, which gathers to decide on monetary policy. Following May's disappointing employment report and Chair Yellen's shift in language, thereafter investors are all but certain that the Fed will refrain from acting at this meeting. Thus, the focus will turn to the updated dot plot, the new economic forecasts, and Yellen's press conference following the meeting. In the UK, the employment report for April is released. On Thursday, during the Asian morning, the spotlight will be on the Bank of Japan monetary policy meeting, where the bank is expected to stand pat. Even though Japan's inflation rate fell further into the negative territory, following the encouraging GDP print for the first quarter, and given the July upper house election, we believe that the bank will prefer to wait for the post-election era to reconsider its policy. The Bank of England is widely expected to remain on hold at its last policy meeting prior to the Brexit vote. The focus of this meeting is likely to be on the MPC votes and the minutes of the meeting, but with the EU referendum less than 2 weeks away, we expect the bank to reaffirm that it remains on hold until the dust settles. The Swiss National Bank will gather to decide on interest rates as well, and the forecast is for the bank to stay sidelined as well. However, given that June is a month filled with risk events and that CHF tends to strengthen in such circumstances, we hold the view that officials could act even outside of scheduled policy meetings to prevent unwanted CHF rallies. Finally, on Friday, Canada's CPI figure for May are coming out. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.